I have $825,000 in debt. Now what? Like most Americans, 67% are living check to check. I myself work in healthcare and earn a high income, struggle with this also. So in this video, we'll go over 6 debt obligations that I have to mortgages, student loans, and credit card and personal loans, and try to pay off my debt and be financially independent. So make sure you watch this video all to the end, because any one of these could lead you to financial freedom. All right, let's get started. So number 1 is my debt obligation to my mortgage lender. You can see here. So I bought this house in 2017 at a good price. At least I believe so. In 2017, I bought it for $450, and then the rate at that time was 4%. But then COVID hit, like I think 3 years later. The government had backed down on their interest rate to stimulate the economy. So I was able to refinance the house at 3.3%, dropping my mortgage monthly payment obligations to a lower amount. That way I'm actually saving more and paying less in interest rate. Unfortunately, after the pandemic was over, the interest rate went back up because of inflation, kind of blocked the inflation from happening. So if you haven't seen this video here about how I talked about is it the right time to buy a house now or later, click on that video up there. So I bought the house for $450,000 at a rate of 4%, and I refinanced it 3% and took equity out, which means I get cashed out. If you haven't watched that video there, how you can get a personal loan, equity, and the differences as far as getting a personal loan versus pulling equity out of your house, watch that video there. Again, I'm not a financial advisor. I'm just saying that I don't think it's a great time to buy or even sell right now, because if you do sell, where would you buy on the next home unless you have a lot of money stashed up? Number 2 is student loans. At this point, the Biden administration has held off any student loan payments, I believe, till end of August. Don't quote me on that. That's a big chunk of that pie where we're going to flash across the screen here, where all my debt obligations are coming from. So I owe about $250,000 there between my bachelor's, master's, and PhD. At this point in time, the taping this video, the Biden administration has held off any loan payments to your student loans. Although you can still make payments, you're not obligated to pay or don't need to pay at this point. There's some lenders out there that will offer you a little bit lower interest rate, a 0.25% interest rate with your student loans. If you take, there are banks and mortgage lenders that will offer you a 0.25% cheaper if you do a credit card or direct debit from your account to pay for your student loans. That's one way you can look at it. Other ways you can reduce your debt obligations to student loans, either if you're public service professionals such as teachers, EMTs or first responders, and even nurses that work in rural areas, or that are able to get their loans paid off if they commit to a certain number of years. I think that's one way you can do it, unless you sign up for a job also that offers like sign-on bonuses. You can take that sign-on bonus and pay off your student loans that way. For a 2-year commitment, sometimes the jobs will offer that, and a profession sometimes will offer you that, or sometimes professionally if you offer to be paid a relocation fee, then you can use that relocation money to pay off your student obligations. That's one way you can look at it. So number 3 is credit card debt. I believe credit card debt is good to a certain amount, but I myself have gone through bankruptcy that if you're irresponsible with credit card debt, it can lead you down to the abyss very quickly. So keep your credit card debt low. If any, try not to use it. As I said, I'm not a financial advisor. I don't like credit card debt. I'm trying to pay it off as fast as I can. So there's a couple ways you can get rid of your credit card debt, either through a 0% introductory, where you can pay off your credit card without incurring interest rates. But you gotta be careful, because when those things expire, you will incur an interest rate based on those credit cards. And then there's a couple methods you can use. It's called the avalanche method, where you pay the highest interest rate, and then that's how you get rid of your debt. Or you can do the snowball method, where you pay a little bit on a credit card and it kind of snowballs and becomes a big payoff for your credit card. Number 4 is personal loans. There's a couple of them out there. You can get a personal unsecured loan, they call it. That way you're not tied to equity. You can get a personal loan based on your house. They call it a personal equity loan. It is a type of loan coming off from your house, using your house as collateral. If something was to happen, they can hold your house responsible. And then the other one I have is an unsecured loan. And the problem with unsecured loans, they don't have any rates lower than 10%. 10.4 is the last time I checked. So you can check with credit unions, a good source to check for personal loan versus a national bank like Bank of America or TD Bank. If you haven't clicked on this video yet, I talked about personal loans without income proof extensively, so I won't go over too much about that one. Number 5 is auto loans. At the time of taking this video, it was about 6%. When I bought the car for my wife, it was about 5%, and that's the lowest I was able to get. That was only a year ago, and now it's about 6%. So the thing with auto loans, you can try to find somebody that will either take over the loans from another bank, like AAA offers different lenders for you. You can check them out. But I know the same thing in home mortgages. The 6% is kind of rampant. It's all over the place. It's kind of hard to get rid of. The only you can do is try to pay extra payments on top of your auto loans. Or if you have an old car that you don't need no more, try to sell that old car and then maybe repay this loan back. That way you get your loans down faster on your car loan. Number 6, and my last thing, is solar panels. I have solar panels on my house. And it cost me about $40,000 at a rate of 3.5% in 2017. The reason I got the solar panels because my house runs all on electricity. There is no gas in the house. Just all electricity, which is a good and bad thing. At the time when I signed up for the solar panels, they offered a SRAC, which is a energy trading expenditure, where they give me a check every 3 months. Any kind of electricity I produce, I'm able to sell it to the market, and they cut me a check at every quarter or every 3 months. Am I right? Okay. So those are my debt obligations, where I'm going to flash it across the screen here, and that's the reason I owed $825,000. If you like these type of videos where I talk about personal finance, today we talked about being free from mortgage obligations, personal loan obligations, and credit card debt. Then go ahead and subscribe to the channel and leave a comment below. I also talk about cost savings. By doing stuff yourself, you can save a lot of money by fixing your own stuff on your car or your house. So go ahead and subscribe to the channel. Listen, you're watching these videos because you believe financial independence is possible. And I appreciate every single one you watching these videos. I'll see you next one. Earn, not earn.